There is a trend building in crypto right now that Wall Street, BlackRock, and the biggest banks on earth are quietly pouring billions on it. It's called tokenization, and it might be the story of this cycle. So in this video, I'm going to show you exactly how I'd build an 100k portfolio to position for it, how much I'd put on each coin, and the biggest mistake people are making right now. For everyone new, just to let you know, I'm CryptoGit, made over 5,000x in my journey. Last cycle I was early on coins like Bitcoin, ETH, NEO, and also Filecoin. All those coins actually did amazing last cycle. Check the date when I shared and check how much they went up. Now I'm documenting everything online for everyone that wants to learn more, so let's get back to the video. I know how in your head right now I'm quite sure you'll ask what is the best coin for tokenization, but this is not just about a certain coin. I'll cover that at the end, and if you don't stay, I'm letting you know that at the end you'll have access one-on-one to me where you can ask directly the coin that you're holding, and I'll give you my opinion on it. But before I get started, I want to touch some important things about firstly how to build your 100k portfolio, because the most important thing at the beginning when you start out is you gotta determine like should you be a trader or investor. So the first thing that comes to most people's mind is what should I be? Should I be a trader or an investor? And I'll tell you a simple thing that happens always in the cycle. So at the beginning of each cycle, usually the first few months of rally and probably the first year is Bitcoin dominating everything. So for example, in 2022, when we had the bottom, usually nothing goes up like this. A lot of people think like that's the bottom is here and it's gonna go like that. It rarely happens like that. Usually bottoms are formed with some choppy environment like this, and all this time, all those months, a lot of people that were investors try to become traders. You know why? Because in their mind, the only way to actually be ahead of everyone in the cycle is if they trade. Because if you start here as an investor, yes, it would be good, right? I'm putting I as an investor, right? It's good, but a lot of people don't have patience to hold. So at this time, you constantly hear stories about traders be like, look, I made this X amount of money. I made 100k, I made 200k, and you'll be like, man, am I doing something wrong? Like everyone is winning, I'm just waiting and doing nothing. Maybe I should become a trader. And usually what happens the first time is Bitcoin movements. Then ETH and altcoins always wake up later. See, for example, what happened in the 2018 bear market and basically 2021 bull run, all in total. So during all this period here, as you see, basically it was mostly Bitcoin and Ethereum movement. Altcoin technically did nothing. The biggest potential and upside for altcoins was at this time. Once Ethereum broke past new all-time high. So once Ethereum broke basically here, broke this level in 2021, that's where the biggest rally started for altcoins. So the reason why I tell you this is something which is quite important, because when the cycle starts, the people that will be the winners are usually the traders. So if the cycle starts with, let's say, I'm taking some random numbers, 50% traders and 50% investors, here's what you need to understand. During all this period, you know what a lot of people said during all this period in 2019? Everyone that was an investor said like, man, I'm tired because I bought Bitcoin at 4,000, then it went back to 4,000 and did nothing for 1 year, while traders all this time predicted this dip, predicted this dip, predicted this pump, and they made money. So what happens? A lot of people that were investors try to become traders. So this ratio changed. Maybe it goes to, I would say, 90% traders and 10% investors, because that's how people react. Most of people, I'll tell you something, react to mostly what they have been through. So if you made, let's say, 100x on altcoins, it's hard for you to be a trader because you know investors will outperform everything. But if you're in this kind of environment where nothing moves and you're an investor, you're pissed off because for a whole year you did nothing while all your friends get rich. That's the difference. So at the beginning of the cycle, this happens. Traders and investors start kind of in the fair category of percentage diversification, I would say. Then later on, within the first year when Bitcoin moves, people think like traders are the only ones to win. Next, what most people don't realize, exactly when this ratio completely changes, the people that make the most money are the investors. Because I remember quite well how at this time in 2020, 2021, we had multiple altcoins going up 50x, 100x, 200x, making crazy numbers. See Solana, see Polkadot, see Matic, see all the coins that you got today, let's say in the popular things. For example, here, Let me go to CoinMarketCap. You can check because they're showing trending. I want to see the top ones. See, for example, BNB did 600x, see Solana 150, Tron did a bit, didn't do too much, Dogecoin did crazy, Chainlink did 50x. So the thing is that look how cycles trick people. At the beginning, you think like, I need to be a trader. Then 90% of people become traders exactly before the biggest move comes that investors make the biggest money. Because this is not about traders don't win. Of course, traders win, but it's about picking how much money that you'll make. I remember how all this time here, if you were a trader, it meant that you made the less money. You know why? Because if you had a trader mindset here, you probably sold on the first 2x, on the first 5x. You sold your coins too quick while the whole rally went up like crazy. So the cycle always tricks people to be like, the first that who will win are traders, then are the investors. The issue is that you gotta be one, because you can't try to change it and be like, I want to be trader and investor. Everyone that tries to plan this, I've seen actually have it hard to time it exactly, because tell me how you know exactly when you're gonna change your strategy from trading to investing. Like a clear example, what happened in the past month is Zcash. Zcash, for example, did a 20x in 3 months. Imagine if you were a trader, because all this time Zcash did nothing, right? And I agree, 1,200 days, it's crazy. But imagine if you are a trader, you probably sold somewhere here, then missed a 20x, which happened in 3 months. So my point is that what you have to realize when you play the game of trader and investor is that traders make the least money when the cycle is over, in a full cycle. Investors might make the least money in the short term, maybe first year or even 2 or even 3, depending how brutal the cycle is. Because for example, the cycle that we have right now, it's like that, but they win in the end. So traders come with basically, I would say, instant gratification, while investors have a delayed gratification. But it's a very important thing to understand, because you want to chase what makes you the most money. And from my whole 9 years experience in this industry, if this is the chart, the people that make the most money are the investors that are willing to wait for so long and have the patience, the emotional control to hold. They're the people that make the most money, because no matter how much you traded this whole time, let me go back to 2019, no matter how much you traded and how much money you made this whole time, you'd never outperform the guy that captured Solana that did 150x. You'd never outperform the people that captured BNB that did 600x. So in the middle to end cycle, you gotta be an investor. But as I said, if you wanna make the most money, you gotta just try to be an investor from the beginning and understand that yes, trading might be lucrative, but you have to be careful on how you allocate this money. So for example, if you have 100k right now, what I would do is first I would determine what kind of investor I am. Am I a high risk taker? Am I a low risk taker? Or I like medium risk? Based on that, I would allocate the 100k on, if you want to be a trader. For myself, I would just invest, because I know investing makes me the most money. I know investing actually is for me. I don't like to be 24/7 on charts and try to predict what's going to happen tomorrow. I try to be right in the full cycle and capture the most money. But if you're a bit different, if you like to have some leverage position, you can play it like this. For example, you keep 20% of your money in trading and 80% you keep on investing. Now, the biggest mistake that most people make is when they go more in trading versus investing. I think that's the biggest mistake that most people make, because no matter how good you are at trading, like bring me all the data that you have outperformed everything and you're the best trader, you still don't make more money than investors. Like, tell me how you'd outperform the guy that made 150x on Solana in 9 months. Trade for the rest of your life, you'll not make those numbers. So I think if you have more money in trading than investing, it's a pretty big mistake, especially in crypto. Now, in stocks is different, because stocks don't have this kind of environment movement that crypto has. In Forex, I totally agree. Yeah, that's what you should do. But this market rewards the most people that can delay their gratification and they can hold for long term. And now the next thing that I see as the mistake that a lot of people make is everyone thinks like buying those coins today is going to be safe. So everyone thinks that if you have BNB, if you have Solana, if you have Dogecoin, if you have Chainlink, you're going to be fine, because some of them fit on the tokenization narrative. For example, Chainlink for sure fits the tokenization narrative because they have the oracles. BNB can also help with tokenization because they got coins, they got infrastructure that can help to actually facilitate that thing. Solana also is for tokenization because there are a lot of protocols that are being built there, like real world assets that are coming to Solana. Now, everyone thinks like the biggest winners on each cycle there will be major coins, but let me tell you something which is quite important, because I was in 2017 and I'll tell you my mistake. So I'll tell you an historical snapshot of basically top 10 coins in 2017 and an historical snapshot of what happened in 2021 in November, let's say November 14. So here's the difference. I remember, because I was here, I remember in 2017 I was buying Dash, this coin. It's a privacy coin. Back then it was so big. I was buying on Bittrex. Shout out for people that remember Bittrex exchange because it's down right now. So I was buying this coin. Then my mistake, what happened? Then my mistake that I did is this thing. When the cycle started, this thing here, I was still holding Bittrex because I made some good money last cycle, not last cycle, 2017, but I basically lost almost all of it in the bear market, and I still held that coin. So the feeling that maybe I shouldn't sell that thing until I get at break even held me back, because I thought I'll sell Dash when I get at least at break even. And look what happened with Dash, for example, because I'll leave it right here. Look what happened with Dash. The coin that in 2017 felt safe almost didn't have even a double top. Look what it did, 443. Look when it was all-time high. It was 1,400. It never came nowhere near to where it was in 2017. So here is the historical snapshot from 2017. It's Bitcoin, ETH, and what else? I think it was Cardano, which is 11 right now, and that made new all-time highs. Remember this coin? Monero, Bitcoin Gold, Dash, Litecoin, IOTA, XRP, Bitcoin Cash, all those coins that felt safe in 2017, where they are in 2021. Look, where they are. It's not here. All the 2021 list, top 10, I'm just calculating the top 10, is replaced. It's replaced with Dogecoin, with Polkadot, with Solana, with Binance, meaning that the majority of the coins that felt safe last cycle actually didn't do much. So I tell this because today a lot of people are thinking that if I buy Solana, I'm going to make the most money. That's not true. And it's proven by cycles. Only 3 coins from 2017 to 2021 made a new all-time high. And it was only Bitcoin, Ethereum, and Cardano. XRP did nothing. IOTA did nothing. Bitcoin Cash did nothing. Dash did nothing. Again, I'm not saying you can't make money. Just see the performance that it did compared to where it was into the past, and how much you could have made on new coins. For example, look, Dash at the bottom was 43. At the peak, it did not even a 10, let's call it a 10x. You see the difference? It did only a 10x, while Solana did over 200x, which was a new coin. So the mistake people make right now is they think like, what's safe, what's a major coin is gonna give me safety and the biggest gains. It can give you safety, but that safety means diminishing returns, meaning that you'll not make the most money. So if, let's say, Solana today is gonna go up, something that is really unknown, undervalued, I'll put the letter here, might be something that is moving like this, but it will go parabolic. So you're gonna chase these small movements and you're gonna miss this big movement. It's exactly what Solana did last cycle. Now, how I would position my 100K portfolio for this movement? Because the biggest mistake that I noticed most people making on those days is they all go in one category of risk. So let's say you got major caps and risky coins. Let's call it risky new altcoins. Now, what I notice people do all the time is they sit on the no man's land. I call them like this because what they do, they just go and have, let's say, 100K and they have only top 20 coins. So basically they have major coins. They have Bitcoin, Ethereum, Solana, DOT, AVAX, Link. So all this allocation of 100K is going only in one category of risk, which is major coins, and they have no exposure to the upside. They only seek what's major, but they forget that they are having diminishing returns. So a smarter allocation, what I'll do is I'll divide my 100K between major coins that I have here and also risky coins. So for example, this 100K, if I was to invest this kind of money, I would play, for example, I would have 60K on new coins, and then let's put it like this, and then I'll put 40K on the major caps. Now, why I'll do that? I'll do that because you got protection from the upside. I'll put it here, upside, and also protection from the downside. When I say protection from the upside is to not miss those gains. Like, no matter how much you might not like and be like, yeah, I don't like 100x, I want to just make some money. It's good to be part of the history, man. Like, everyone cares to make money, so you have the potential to do it. Like, a lot of people be like 50x 30x it's not real and it's unsustainable. Honestly, like, if you call Solana did 100x, Hyperliquid, Dogecoin, all those coins that did all those numbers unrealistic, like, it's not one that you can say like, oh, one did it. It's a major, it's a lot of them that did those numbers. So those numbers are not unrealistic, they're just hard to actually be achieved, which I'm totally with you and I totally agree. It's all knowledge and time, and you need to be long in this game. But that's why I'm here for, so I can shorten you this learning curve. So here's what I'll do. 60K I would have on new coins, 40K on major caps. Now, if all, because you might ask, what happens if I lose all the 60K and it goes to zero? If you just put that 40K right now on a safe coin, like let's say Ethereum, right? So I'll put it here, Ethereum. If you just do that 40K, Ethereum right now, the potential is, let's say 2 to 4x, right? 2 to 5x. But I'll take the average of 4x. Like, if Ethereum does a 4x, which is like approximately over $10,000, which is pretty realistic, you'll get on this 40K 160K. So even if the worst happens and you are wrong on basically picking those new coins, you're still gonna get more than what you put, and you're likely gonna go to 160K, right? Now you might ask, what if it doesn't go up? But then that's the risk that you would take anyways by just doing what you're doing right now. So my point is that never sit in the no man's land that you go always with one category of risk. A lot of people, as I said, they all either buy risky new coins or major caps. Now, even if you're a low risk taker, I still think, in my own opinion, it makes totally nonsense to have all major caps, because here's how you can play it also. If let's say you're a low risk taker, let's say you have 100K and you don't want to take too much risk, but you still want to enjoy the gains. Let's say you keep just 80K on Ethereum, right? And you put 20K in new coins. Now, worst case scenario for you is this: you lose basically 20K in new coins, right? You lose it all, and you have 80K on Ethereum, which, let's say, upside is 4x, and you can get like really great gains even if the worst happens. You get my point? So you're basically risking 20K, and it's not even a risk at all, because 20K you're gonna put on a coin that got, let's say, 20x potential, which possibly you can make 400K. That's kind of the difference that you have to realize. That's why it's such an important thing to understand how you're gonna play the diversification game. And even if you don't do this and you lose 20K, you're gonna get with 300K plus on Ethereum that you're gonna do. You see why I think, even if you're a low risk taker, it makes no sense just to hold the major coins. I think if you become a bit more strategic, you can do much better. Everything I'm sharing in this video is what I'm covering every day in my free Telegram community. If you like this video, I'm sure you love my free community. I also review what coins you're holding and give you my honest opinion on them. If you got any question, you can ask one-on-one me there. And you can join by clicking the link in my bio or check the pinned comment. It's all free, and let's get back to the video. And one important thing that I would do on the allocation of 100K is I would focus more on concentration rather than diversification. So one of the things that I notice people make all day long as a mistake in crypto is they've heard something like you gotta diversify, and they don't even understand what that means. They've heard Warren Buffett saying that, but they haven't actually got the full context. Because Warren Buffett, for example, has said that wealth is made on concentration, while diversification is to protect it. So every time someone holds a lot of coins, it just shows to me how insecure they are on their holdings. every time someone comes to me with quality over quantity, it shows me how much they believe on the coins that they hold. So the biggest mistake that people make is they think like just by capturing a lot of coins, it's going to be easier for to capture something that goes up. So here's what people think. Let's say you have 100k, right? And you're going to put 20k on those coins, but you don't know what you do, right? So you're going to put 20k in high risk coins, or let's call it new coins, right? So you're going to do that. Now, what 99% do, they be like, I'm going to buy this, 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 and I'm going to diversify a lot. Meaning that this 20k, what they do is they go and be like, listen, I'm going to put 2k, I'm going to put 2k in 10 coins. That's what the majority do. So they think like if you put $2,000 in 10 coins, it's much easier to capture 20x without realizing what they're doing. First of all, this is not true, because the more coins you diversify, the weaker your research process and the weaker your exit plan. And even the money that you'd make, it is going to be insignificant because it's going to be divided in multiple parts. Let's say this kind of coin here goes up 20x, right? Let's go, it goes up 20x. You'll be like, I won, I made 40k, right? That's in your mindset as a win because you made 20x. But in the proper investor mind, I would say this kind of allocation that you did costed you to miss so much opportunities. Because if I was in your position and I had the knowledge like I have today, I would put maybe 8k in one coin that I'm confident and do a 20x. You see the difference? So 8k on 20x, it's above 150, 160, right? So here's the difference. By diversifying a lot of pieces, you'll be like, I won because you make 40. But this is what you missed just from this kind of move. You missed an upside of over 120k just because you had a lot of coins. And I know how a lot of people be like, yeah, but another can go because it's higher probability. It's not true. It's like, think every coin like you buy, like a new business you open. Like, are you going to succeed more if you have 10 businesses at the same time, or if you have just one or two? What is more sustainable? And even if you win, and even if you do this right, what about the cash out plan? What about the exit strategy? How you can build an exit plan when you have 20 coins in your portfolio, 13 coins compared to 1 or 2 or 3 or 5 that you can research quite well and you know like the back of your hands. Now, everyone thinks, here's a misconception about tokenization, because I want to touch a bit more. Everyone thinks like tokenization is going to be about 1 or 2 coins that will go like 1000x or 100x, and that's how you'll make money. Tokenization, in my own opinion, it's not going to be about that. I think tokenization is about the adoption that it will bring to crypto. So what tokenization is doing is basically making the everyday people use more crypto. People that buy stocks, people that buy bonds, people that can't access real estate for the first time, they can do it on crypto. So imagine how many people that actually buy mutual funds or buy ETFs haven't access to crypto before. Imagine when they see, let's say, those coins here in their wallet. Imagine how easy it is for them to buy those coins. So tokenization is going to be about what's easy for people to understand, what's fun and shareable so they can enjoy, and what makes them money. So if you figure out a coin that has all of those three, it doesn't necessarily needs to be like people be like, oh, it's like Canton Network or those coins that are about tokenization, right? It's not just going to be about the popular coins that everyone knows, like Chainlink, like Canton Network or Ondo. I know everyone tokenization or Ondo and Canton, but I'll tell you something. The coin that I'm the most bullish, of course, is Ethereum. The reason why is so simple. Like if you want to have something like safe that I believe can do quite well, is Ethereum, because it's two simple facts, and I'll just stop it right there. It's stable coins and actually tokenization. So 50% of all stable coins are relying on Ether and minted on Ethereum. When government wants a buyer of their debt, which they have USDT, most of USDT is issued on Ethereum. Ethereum is the most safe infrastructure at the current moment, meaning that institutions jump on safe platform. Now you might be like, why they do it also on Solana? Totally agree, they do that too. But what you have to realize is that institutions don't care much about what's what has more scalability, what has more speed rather than security. A lot of people be like, yeah, but Solana is quicker than Ethereum. I totally agree, I totally get that, but do you think like BlackRock that puts when they put trillions of dollars, do they care for speed only or more security? It's all about security. That's why they're choosing Ethereum. So Ethereum got stable coins plus tokenization. Now, this is not about making the most money in a certain coin. This is about capturing, as I said, what is the thing that can attract those new people that will come, that is easy for people to understand. There's not some AI bullshit kind of stuff. What's fun and shareable, and what makes the people money. Because if the chart goes up, it's like a drug for people. People love it. They share it with their friends, and that's kind of the narrative. So if I have a coin that I'll bet for tokenization is Ethereum. I know this might be a popular answer and maybe you might not expect it that, but you have to also realize something about tokenization. Tokenization is going to be like AI IPOs. Here's something that you gotta realize. There's never been a time in financial markets that government and all institutions, so here are government and institutions and here are normal people, I'll put it like this. There's never been a time that those guys told the crowd that this thing will be big and you got rich. Listen to that carefully. There's never been a time government and institutions told you something would be big and you got rich. Today everyone is talking about tokenization. BlackRock is telling you that tokenization and blockchain is where internet is in the early days. But I believe this is going to be like AI IPOs. A clear example is SpaceX IPO. It's a really clear example. What happened with SpaceX IPO? Everyone knew it would be big, right? Even a kid. If you ask a kid, SpaceX IPO would be big, he said yes, because Elon Musk was behind it. But who got rich? Who make money? It's only those guys. It's only institutions, smart money, accredited investors. The people here joined too late. So even for tokenization, the mistakes that people are making is they're thinking like it's going to be just about one or two coins. What about Canton? What about this? What about that? I think it's not just about a certain coin. I think you need to figure it out what people will buy when they enter crypto. So it's not that they're necessarily buy something that has about tokenization, because institutions always will control the rails and always will not allow you to get rich. Because here's something you gotta realize about, let's say, let me get you to basically actually Canton network. So because everyone loves this coin, it's so good, don't get me wrong, they have the rails and everything. Look how much they raised, $135 million from VCs. Do you think you're early when they raised $135 million? The reason why I tell you this is because coins that got VCs, they're captured from institutions, meaning that it's so hard for you to make wealth on what's obvious. The wealth is always based on coins that are unpopular, that most people don't know about them. So don't try to focus on finding the right coin for tokenization. Try to focus on finding the right coin that when the influx of people enters in crypto, they're gonna buy. So if you want actually to have my opinion on what you're holding, what coins you're basically having, and tell you if those are the right ones for this cycle, in my description you'll have my free Telegram community, and there you got a pinned post. On the pinned post you can have my Telegram where you can message me one-on-one and I'll directly get back to you and give you my honest thoughts on them. Go it, it's completely free, and I'll see you inside, and I hope you enjoyed, and don't forget to subscribe.